Very selective losses here, particularly in industrials and some of the tech sectors. 8-1 declining to advancing stocks at the open, Carl. That's not quite 10-1, but that's a good little flush here to start out. We did get right near that 2710 level. That was the low on October 11th. If you look at the sectors, it's the sectors that are hit on global concern issues that are weak again today. So you have your semiconductors, you have energy stocks, you have the emerging markets, and you have the industrial names. Staples like Procter & Gamble, Johnson & Johnson, they're all flattish right now. I just want to remind everybody about the guidance. I know everybody's worried about 3M's guidance. They did cut the guidance, and that's an issue. United Technologies, though, raised their full-year forecast. Harley-Davidson maintained their full-year motorcycle shipment forecast. CAT reiterated their full-year guidance. Yes, it is a little below analyst expectations, but they didn't cut anything. And Verizon affirmed their full-year guidance as well. So just bear in mind about this. We're not seeing dramatic cuts in any guidance here. One thing is happening that I have noticed that's a little concerning. Stocks are not rising on good earnings or raised fourth quarter guidance. We've seen a number of companies where analysts have raised their fourth quarter guidance because of the comments the company made, and they're really not going anywhere. They're not doing anything. So CSX, for example, United Rentals, Citigroup, VF Corp, AutoZone, all had numbers basically raised by analysts for the fourth quarter. Normally this would be good news for the companies, and they're not. This suggests there's something a little broader going on, broader concerns to just individual earnings for these companies. So the debate right now is very simple. Do the positives outweigh the negatives or not? Remember the positives that we've seen earlier in the year. We had stocks rising on the strong economy. We had stocks rising on higher revenues. We had stocks rising on tax cuts. We had stocks rising on reduced regulation. All of this is what powered the stock market in the end of 2017 and in the early part of 2018. Things are a little bit different now. We've got some headwinds that are emerging. Number one, we've got the tariffs. We have the higher rates. We have the higher labor costs. We have the higher material costs. We have China slowing down, and we have a lot on the geopolitical situation, along with the populist government in Italy and potential isolation of Saudi Arabia. Remember, they're a major investor in technology funds overall here. So here's the question overall that we're dealing with. How much real contagion is there right now? Just how stressed is the market? As of the close yesterday, it was pretty confined to me, the way I look at the market. So I see no recession coming. That's the most important thing. Number two, I don't see a lot of credit disruption, which would bother me a lot. I haven't heard a lot about that. I know people talk about liquidity, but when I look at the spreads down here of the big stocks, spreads are still pretty tight. I know people voice vague concerns about liquidity, but I don't see it daily in the stock market trading. I still see tight spreads overall. That's important. Meantime, we've got new lows in a number of sectors. A lot of the industrials, that's the area where you're hitting. Caterpillar, 3M, Johnson Controls, United Rentals, a whole bunch of them are at new lows. I mentioned yesterday, I think the biggest concern the market has is the banks are doing nothing. And you've got Citigroup at a new low and Fifth Third, some of the regional like PNC and Key Corp at 52-week lows as well. You've got the flat yield curve. You've got concerns about anemic loan growth. You've got higher deposit costs. They're just going nowhere. It's going to be hard for them to move. Finally, I know you might get a little bit of bounce in the home builders, but we are sitting at new lows at Pulte, at Lennar, and D.R. Horton today as well. So tough situation, but we're well off of the lows that was right at the opening bell.